Assalamualaikum and hi. Today our group conducted by Umi Manarina binti Muhammad Basir, Nurul Al-Arina binti Abdullah and me Nur Eli Atira binti Muhammad Kamal will presenting about the issue in regulations of late payment charges in Islamic financial institutions.
Assalamualaikum warahmatullahi wabarakatuh. My name is Umi Manarina binti Muhammad Basir and my matric number is 285206. Payment penalty, known as late payment fee or charge. Money penalty imposed on the creditor who don't fulfill their financial commitment on time. Late payment penalty in Islamic finance present a complete issue in terms of Sharia governance and jurisdiction. This penalty which imposed on creditor who fail to fulfill their financial obligation on time are commonly used in conventional banking to ensure a timely payment and compensate for the increased costs and risks associated with late payment. However, their implementation in Islamic finance raised concern due to the principle of fairness, justice and the prohibition of riba. Late payment penalty involve additional fee and compensation for the lender without any productive activity or increased risk, can be seen as resembling riba. Furthermore, late payment fee may be viewed as exploitative as they can further burden borrower who may already be facing financial difficulty or unexpected hardship. From a Sharia perspective, the principle of justice and fairness in financial dealing should be considered, and penalty that increase the financial burden on borrower may not align with this principle. Next, I proceed this presentation with related law and standard of late payment penalty issue. There are three laws in Malaysia that are included in this slide. First is the Contract Act 1950 is a key legislation in Malaysia that govern contractual relationship. It provides a legal framework for the formation, interpretation and enforcement of contract. Under this act, parties have the freedom to include provision for late payment penalty in their contracts subject to the general principle of contract law. The second one is the Consumer Protection Act 1999. This law is designed to protect the interests of consumer and promote fair business practice. While it does not specifically address late payment penalty, it prohibits unfair practice by business and provide remedies for consumers who have suffered loss due to such practice. And the last one is the Construction Industry Payment and Adjudication Act 2012, CIPAA, which specifically address payment-related issue in the construction industry. CIPAA aims to ensure timely and fair payment in construction contract by establishing mechanism for progress payment, dispute resolution and late payment penalties. It provides provision for late payment interest and allow for the recovery of such interest in the event of delay payment. These regulations are designed to address the unique circumstance and challenge of the respective industry, ensuring fair practice and timely payments. That's all for me. I will pass to the next presenter.
Hi and Assalamualaikum. My name is Nur Eli Atira binti Muhammad Kamal and my matric number is 287064. So I will continue present about the discussion of the issue. In Islamic financial institution, the issue of late payment fee center on whether or not penalties for late payments are permissible and how they should be imposed in line with Islamic financial principles. The cornerstone of Islamic finance in Sharia law, which outlaws the charging or receiving of interest, riba, and promote equitable and fair financial transactions. The Islamic financial institutions may actually lose money as a result of the party client's overdue payment in the form of incurred additional expense, legal fees, and other related costs. So there are three issues of late payment charges, which are prohibition of riba, determining how to fairly calculate the fee for both the debtor and the creditor, and lastly, how the bank to manage the money from the late payment fees. The first issue is the prohibition of riba in the late payment charges. Riba, which denotes any predetermined or guaranteed interest on loans, is forbidden in Islamic finance. Since late payment fees are assessed as a defined sum or percentage on past due payments, one might compare them to interest. This raises questions regarding how these charges square with the riba prohibition. According to the Sharia law, interest riba is defined as any additional fees assessed on borrowed money on or different in its worth. Because the debtor failed to meet his obligation in a timely manner as previously agreed, the issue of whether Islamic Bank as the creditor can impose curtain charges on the debtor in addition to the main amount arise. This additional fee is discussed in Islamic legal study under the headings of Ta'wid Gharamah or Al-Shad Jazai. Three issues generally come up when discussion the introduction of late payment penalties. This validity of the charge itself comes first, followed by how the rate is calculated, and last how the proceeds from the charge are handled. So for the second issue is determining how to fairly calculate the fee for both the debtor and the creditor. The late payment charges may be an unfair burden on borrower. Late payment fees may be perceived as a kind of punishment for borrowers who are already struggling financially. This may be viewed from an Islamic perspective as unfairly burdening people or organizations that are already having a hard time making ends meet. It might be in opposition to the equality and justice guiding principle of Islamic finance. The argument stated that the fees must be determined by the actual loss the bank as creditor actually endured. Financial transaction laws also include the expenses incurred by the bank in order to ensure that the debtor will pay the entire amount owed. There are two types of costs, direct like the cost of recommending the debt, and indirect costs such as employee wages and operating office rent. Islamic financial organizations only permit to charge direct fees and costs related to the debt disbursement according to our fee Sharia standard number 90. So for the last issue is how the bank to manage the money from the late payment fees. If the proceeds are not the bank earnings, then no benefit can be received from them, but if they are, then the Islamic bank can treat them as income and profit from them. The charge might be listed as revenue in the bank's account to defray the actual expenses related to servicing the past due account. The treatment of the proceeds as bank revenue is debatable among contemporary experts of Muamalat, Islamic law of finance, although this is the generally accepted view. For instance, at its 1995 meeting in 2010, the SAC of BNM come to the conclusion that ta'win is admissible and recognized as income on the grounds that it is assessed based on the actual loss incurred by the Islamic banks. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. I'm Nurul Al-Arwina binti Abdullah, metric number 285-295. Now we'll talk about the solutions or suggestions for the issues faced by the Islamic financial institution regarding the late payment charges issues. For the solutions of the first issue, which is the prohibition of riba in the late payment charges, the Islamic financial institutions can alternate the late payment charges. These charges could be based on actual costs incurred by the institution as a result of the delay in payment, or may include non-monetary penalties that align with Islamic principles. Other than that, they can also reduce the late payment charges, where the financial institutions should consider reducing late payment charges to a reasonable and fair level without compromising their commercial viability. The solutions for the second issue, determining how to fairly calculate the fee for both the debtor and the creditor. The actions that can be taken is doing the cost-based calculation. The late payment charges can be calculated based on the actual cost incurred by the financial institution as a result of the delayed payment. Besides, another suggestion is they can do the flexibility and case-by-case evaluation. This approach takes into account the specific circumstances, financial position, and the reasons for the delay. For the last issue, which is how the bank ought to manage the money from the late payment fees, the financial institutions can seek the consent of customers on how the late payment fees should be managed. This approach empowers customers and ensures their preferences are considered. They can also opt for Sharia-compliant investment, which means that the funds generated from late payment fees can be invested in Sharia-compliant investment instruments or projects. This approach ensures that the funds are put to productive use while maintaining compliance with Islamic finance principles. Concepts can be used to resolve the late payment charges imposed by an Islamic financial institution. This additional fee is discussed in Islamic legal study under the headings of Ta'wid, Gharamah, or Al-Shar' Al-Jaza'i. Malaysia's regulations concerning late payment fines are discussed in this part, which illuminate the regulatory structure in the country. In Malaysia, a number of rules and regulations regulate late payment fines, ensuring fair practices and safeguarding the rights of all parties.